So just starting over, we're talking about why long dollar. So the dollar was strong, probably on the back of safe haven flows and a weaker euro. The euro has been under pressure, and it took out those stops that we had identified at the start of the day in the morning session up in here. So that was the trajectory we were looking for, and we got that um, on the day. Now, the euro, there are concerns about stagflation there. Bonds are being bought up, yields are off at month end as we head into non-farm payrolls. So we got questions as to why was gold lower and yields were lower. Well, gold offers no yield whatsoever. As I said, people are putting their money into the US dollar. There's a squaring of positions at month end. People get paid out in US dollars. There's demand for dollars. Debts are settled in dollars and so forth. So it's a lot of month end stuff going through and ahead of non-farm payrolls tomorrow. So I think we'll get some weakness then out of gold. It's regarded as a more risky asset. It's certainly a lot more volatile um, than gold, than the dollar and bond prices. So I'm not sure that people want to be in gold into month end as we head into non-farm payrolls on Friday. So that's basically a brief summary on that. Does anyone have any questions on that before we move on into the charts and start looking at your currency pairs that you want me to look at? And just while I wait for anyone to ask any questions, we can go over the data. The July PCE deflator was in line with expectations, so that likely boosted the US dollar because it plays into the hawkish sentiment surrounding the Federal Reserve. Um, just looking to see if there's anything else we need to look at. Oh yeah, we got some remarks then from Fed Bostic, and he was sticking to his preference to keep rates steady at current levels. Okay, that's no problem. Bloodwish. So turning to the jobs data then that's coming up. This is going to be on August labour. So there's an estimate for around 170,000 jobs, and that is likely to cement the decelerating trend and fit with recent data that has actually highlighted a slowdown in demand for labour. Um, the end of July jobs report reported 338,000, a drop off of 338,000 in job openings, and also a deceleration in the quits rate. So people quitting their jobs, leaving their jobs at a faster rate, um, and uh, and also there were more scarce in August openings, job openings. So um, that kind of plays into the dovish narrative that's been building up around the FOMC. But when you compare economies such as the US to Europe, Australia, the UK, um, the dollar is likely to find resilience on the fact that while data has not been as impressive, and there is good news in that because uh, that would um, that would potentially lead to the Fed reaching its 2% target on inflation with a slowing economy. Um, but in comparison, relatively speaking, the divergence between the Fed, the ECB, for instance, so euro dollar, um, plays into the dollar's favor. So, really, in order for the Fed to keep rates on hold, they're going to want confirmation that the softening trend in hiring is continuing, and that's what's going to be important tomorrow. And indeed, the what you call it, the unemployment rate as well. So that is where the focus is going to be. So on the flip side, if the August number is a blockbuster, then you might find an altering in markets pricing in September, the Federal Reserve, what they'll do in September, and that could increase the odds of the Fed hiking rates as soon as September. And if they were to, that would be a real shocker for the market, and that dollar would fly, and stocks would tank. Um, so let's see how we get on with that tomorrow. So there's no point in speculating in my mind. We're too close to the data. There's nothing you can do. Uh, the bigger money has already taken their decision on tomorrow's data, and they'll probably use the data tomorrow to get out of any positions that they've been building over the last few weeks. So some people were asking, what's my opinion on the data tomorrow? I mean, it's irrelevant. Until the data comes out and the market reacts to it, it's not advisable to position yourself ahead of the data. It's too soon. If you were to, position yourself ahead of the data, it should have been done a long time ago. Um, and you'll be looking to get out of the trade, or you'll already be out of the trade by now, coming into the data. So it should be a lively event. Let's look at the stocks. So we had the S&P and the NAS, which are tightly correlated, and then the US 30 disjointed. So um, again, what we want to be looking at is market structure. So let's clean up this chart entirely. Um, we had the trendline support taken on, and we are technically on the backside of that trend now, because we broke these lows. So someone asked, what defines a broken down market? Well, this is a broken down market because we've simply broken structure. We've broken structure. This was the last highest low before the high. Okay, and we broke below it on the session. So in doing so, that is simply paving the way for lower levels to come. The next key level is going to be over here. Now, while this is a broken down market on the 1 hour, on the daily chart, you're going to be looking for this here. So that low there, to classify this as a broken down daily chart. But on the 1 hour chart, we are broken down. So you can be looking for shorts. Now, that's not to say you just sell, right? And keep your fingers crossed and it keeps going down. You need a structure and a strategy to as your foundation for your trading decisions. So in this respect, yes, we are front side of the bearish trend, right? But have we seen enough of a correction to warrant the conviction that this indeed is destined to go lower? More often than not, you get the displacement, you get the pullback, and then you get the continuation. I like to see a couple of peaks. So we've got one peak here. I'd like to see a secondary peak. Now, a secondary peak could result in a higher high, but I'd want that higher high to be a sharp move up and a rejection. And then you have a double peak formation, or it can be a secondary peak that is a lower high, so a secondary peak. And what that essentially doing is filling in any orders that have been bought lower. So you've got impassive investors, for whatever reason, that are leaving their orders in, and the market is rebalancing itself up into those orders that are probably being pulled down, okay, because they're acknowledging that this market is broken down and moving away. So instead of wanting to sell up there, they'll be happy to sell a bit lower. So generally speaking, what happens is the market comes up to fill those orders, business gets done, and basically the buying dries up, and there's more supply on the market than buyers, more supply than demand, more offers. The offer gets lifted and the market tumbles. So that's what we're looking for in this kind of situation in a broken down market. All right, so that's what we're looking at for. Are you sharing your screen? Yes, I am. Yeah. You may need to log out and come back in. Does everyone else see my screen? And then that's the same for the NAS. Not quite as offered as the S&P. When in fact, I would argue that we're not even broken down yet on the NAS. So that could be a divergence play. Perhaps the NAS needs to keep a catch up with the S&P. So that's worth noting for the day ahead. The line in the sand in that respect, I'm actually going to go down to a 15-minute time frame just to get a better feel for what's happening with NAS. Well, the line in the sand is actually over here, quite a way down. So this is the second peak that I was talking about. It's a lower peak formation than the higher high. So peak 1, peak 2. So some may argue that, well, this is in fact a broken down market because of this drop here, and it was taking out these highs. I mean, I wouldn't argue with that, but at some point you've got to draw the line somewhere and have a rule. But in this respect, perhaps this is a broken down market. It's taken down those highs. If you go down to a 5-minute chart, you're bound to find some structure in here that the market broke. So essentially here. So higher high, higher low, higher high. So you could argue that this is a broken down market on the lower time frames. So this is acting as support currently over here. So you need to be somewhat flexible. I mean, we've got the lead in from the S&P, so you could take cues from there and note that we've broken this structure, we've broken this structure, we've got 2 peaks. You know, that should be good enough to be bearish and start looking for the continuation lower. On the other hand, we've still got this in here, this trend. So in this breakdown here, we took out, essentially we took out this. Right, so I'd just be cautious in selling that market. I'd prefer to see at this point this trend line here taken out and probably some more structure, but it's certainly looking toppy. Okay, so for the day ahead now with the Dow US 30, that sank on the day. Let's clean up the chart. So as you see, it broke out here. And it also broke structure over here, which is now resistance, potential resistance. seems as though we're lower to go. We've got a target area within here. For the meantime, um, anything else you want me to look at, guys? In particular, we could look at dollar yen. So dollar yen is on the front side of the bearish trend, taking out structure. Now taking on this low, finding support there. Perhaps we're going to have a move up into the displacement. So this here, this displaced market, keeping note of the potential resistance here. And so long as we stay below these highs, then we can argue a bearish outlook pretty easily. You've got US yields that are on the back foot still. We've been talking about the sell-off in US yields for quite some time, and we're seeing that. We've got the M formation, drop, retest, bang, lower. So can this continue lower? Absolutely can. Let's see how we get on. Right. Come down to the 4 hour just to get a better feel for what's happening here. So broken down market. So this is yen bullish, dollar yen bearish. Euro yen you want me to look at? Okay. You're going to get strong move to the downside in euro yen. Euro is under pressure. Yen is picking up pace, benefiting from a slide in the Bank of Japan and Federal Reserve interest rate spread. So that is fueling a bid in the yen, which has been on the back foot for longer than I can remember, and it is in need of a correction. So we're starting to see that now. This is the weekly chart in euro yen. All those wicks, pretty bearish. There's no upside momentum. So where this can go from here, let's look on the hourly chart. Starting the day as a potentially as a day 3, day 1, day 2. We've got 1, 2, 3, 4, 5 days of breakouts to the upside. 1, 2, 3, 4, 5. So that's a sort of machine gun pullback, right? So that was a day 3 sell-off in the day count. Day 3 turns to day 1. So day 2 will be on the day count Friday. Yeah, tricky one to call because we've already seen a very strong move to the downside. Don't want to call immediate continuation. Perhaps a pullback is the most probable scenario. I think we're in line for a pullback first of all, and then potentially a continuation to the downside. But data dependent. So let's just keep an eye on what happens in the US. But for a play ahead of them, I don't know. Don't know what London are going to do. You see, I guess London have already squared up. Then perhaps taking it higher to go short. We've got resistance over here. what we can do is measure the hourly impulse and be in anticipation of a correction up into towards structure. Now we're going to have structure. When I say structure, I mean resistance. So in around this 38.2, where these two candles cross over, right? So within that area, if you go down to a say a let's do a 15-minute chart, you'll see there's some sort of agreement in price between buyers and sellers. Home in on that. So all of this in here is potential resistance. I'll just pull that in, which lines up with 38.2. So perhaps we'll have a meanwhile correction to the upside, gravitating towards that for a downside continuation, or we're going to keep going up and up. And in that respect, we've got the 61.8 and the 50% mean reversion, both meeting with resistance areas similar, not as heavily transacted as here, but nonetheless, there's some history of price agreement in those areas. Okay, no problem. US oil. So I'm not sure if anyone traded oil. We got a nice trade out of that into support, and then it just shot higher. So the trade was all of this down here for the day. It's making a series of higher highs, started looking heavy, and it blew off, and then took off again. If anyone wants me to go through that trade, I can. Let me know. Otherwise, we're just going to move on. But from a weekly perspective, just going to measure the correction. It's coming to 38.2, so I'd be happily looking for longs from down in here. As I said before, I like to see a 38.2 and then a continuation. However, in this scenario, I'd be very cautious because of these highs, this resistance. So there would have been room to day trade it from down here up to here, but swing trading it, I'd be taking caution at this point because we could quite easily tumble back lower. Oil is heavily correlated to risk appetite, so again, it depends on what the US economy looks like to us tomorrow out of this data that we're going to get. And if we get something that's negative for risk appetite, so if the stocks sell off, then you can expect oil to trace a movement to the downside as well. On the other hand, conversely, if it were to move up, if risk appetite were to rally, then oil should benefit. No, I haven't done Aussie. We'll do that now. We have Chinese data coming up, so probably a good one to be looking at. Right, weekly chart. We have an M formation, prospects of a correction up into that neckline. We're not quite on the back side of the trend, I don't think. We haven't broken any significant structure. So I'm just going to pull that out to here. Then we're still in a bearish trend. On the 4-hour, no, let's go to the daily chart. Nothing really jumping out to me there. 4-hour chart. why these are green. These should be red, but get rid of them altogether. So I need those lines at the moment. Not sure what they were. Probably support when we were looking at it earlier last week or something. Right, so on the 4 hour chart, we have arguably broken structure over here. So that was the lower high before the lower low, and we came up into that, came back into all of the orders that were resting below here, in and around here, and then we've subsequently started chopping our way up in a horrible grinding fashion. But nonetheless, we've got impulse, correction, impulse, strong correction, consolidation. We're consolidating. Let's get rid of this one together. It's very choppy. I don't like this at all. Very, very choppy. But essentially, it looks like it wants to come higher. So I'm just going to stick with what looks the most obvious. M formation correction. So we're going to target correction into the neckline. I'd say 66 is a target on the upside. Yeah. Okay, so sticking to that. Trying to analyze it on the lower time frames, it's just too choppy. Um, we can just call out the this area here. Uh, so those lows meeting with this congestion, these highs, swing high with meeting resistance, bias to the upside. For the day ahead, right away, mm, right, well, so long as we stay above this low, longs will be okay. But a break of here, we're right back into all of this mess below. So bullish while above 64.50 on the Aussie, and the Kiwi will follow suit and be in a very similar scenario as the Aussie. Again, nothing really jumping out. So long as we stay above, I've had a little pop lower here, but I'm not really interested in that wick. So once we stay above 59.40, then the bias is to the upside in the Kiwi as well. Honey, get down, down, down. Sleep. Um, yeah, but I'm rushing through the Kiwi there, my friend, because it's essentially a copycat of the Aussie. What do you call it? M formation, targeting the neckline area to the upside, 60, 90 ish. but we need to see probably a bit more activity below, bullish structure to lean against to be convinced that we're going higher on the lower time frames. Not really seeing a setup for this one, I'm afraid. Not the way that I want to see things set up. I mean, for this to go long, then it would have been over here because we're trading up into the drop. At this point, we've had the rally. Now we're consolidating, so nothing really to be done. We need to get above 60 in order to ride that higher. So that's going to take some time to play out. Okay, so I think we can pretty much wrap it up. I'm not sure how the market's going to be leading into non-farm payrolls. I expect, I mean, if today's anything to go by, then it's going to be pretty quiet. We've had business both ways today, up and down, if not just sideways. So I think we can sit on our hands and just wait for the data to come out. Okay, guys, so I hope you got some value out of that. If you've got any further questions, let me know. You can always send me a private message, that's no problem, and I'll get around to picking up your questions. Other than that, I wish you a good morning, good afternoon, good evening. Rest well and roll up the sleeves for tomorrow. Okay, dollar CAD. Dollar CAD. Dollar CAD broke down today. It was already broken down since when Tuesday. So broken down, pull back, continuation, choppy, move up into shorts, uh, subsequent drop, displacement, move back, filling orders again, drop, displacement. What are we going to get now? Well, this oil is probably pretty toppy, okay? So I'd be in anticipation in a correction of oil, and therefore that should give dollar CAD bulls a bit of relief, but bearish overall on this pair. Um, just by looking at that market structure and the fact that it's in a sell-off from the highs. Now we've got inside day here, so that was day 1, day 2, day 3 pullback. Okay, let me just get my head around this for a minute. How many days short we got? We've got one. Okay, where's the opening range? So Monday was the opening range. 1, 2. So what we're looking for is a third push, some stability, and then a move up. Because we're getting, this is the opening range Monday, all right, which was an inside day, by the way. But so we triggered stops on the upside, and then we triggered stops on the downside. We stayed with the offer. So opening range, collapse. 1, 2, 3 pushes to the downside out of the opening range. I hope that makes sense. So opening range, initial balance, so let's just call it all one thing. So all of Monday and Tuesday were one and the same thing. All right, we've had 1, 2, and we're into our third day of breakouts of that range. 1, 2, 3. And usually what you'll find is on the third push, you'll see a deceleration, accumulation, and a move up, counter trend. Okay, so well, just be cautious if you're targeting 134 that we're not going to see the end of the move before then, right? You might see the end of this. Well, for the meantime, I mean, if your stop's above the highs, then perhaps you're okay. But I'd just be cautious because this market's going to go for your position. Um, it's gonna know that you're in the market short, and your stop is probably up here. Could be above the highs, perhaps. A bit safer up there, maybe above here. Yeah, I think it would be a good idea to be flat before NFP, or at least the majority of your um, profits in your own bank account, and leaving a little bit on if you fancy 134 still, with a stop that is, well, at a level where you're happy with. But I mean, ideally, you want to be at break even. Um, on the daily chart, just looking at that, we have taken out structure. No, we haven't. Mm, difficult to call these wicks. Well, we've gone up, we've come down. I'm just going to regard that all as one bearish candle. So the structure, so we're still bullish on this trend until we break below 135. So this could easily turn higher, especially given the amount of shorts that are in the market for the squeeze. It's not to say it's going to carry on up, but it could do because we haven't broken any significant daily structure, such as here, on the downside. So we could quite easily short squeeze and then continue higher. All right, so we'll call it a day there then, guys. Thanks for being here as always. Appreciate you, and we'll see you tomorrow.